What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SPCE for Virgin Galactic Holdings. On the left-hand side, we do have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First thing I need to make you aware of is that in the post-market here, they did release some news that they're postponing some of the space flights, and basically, obviously, shareholders did not like that. Big sell reaction here, taking us to what will likely be a gap down for tomorrow's morning, right? So what we want to know is where the overnight low is. So here at and around 2039 for now, and we'll say that the opening print will be here around 2082. Now, don't get me wrong, these numbers can change by the time the bell rings at 9:30, but what we're about to discuss is a framework that'll help you navigate the gap down. So let's take a look at this through the lens of the daily in terms of nuance and scenarios here. So zooming in a bit so we can see this a bit better there, much better. So what we want to do is at least consider the fact that when we have a gap down, or it could be a gap up, right? But for now, gap down, the first scenario to always be thinking about is the gap and trap. So the way that unfolds is if we open here, fail to take out the overnight low, trade back up higher through the open, look for the long to start to fill the gap up towards the low of today's session. So that low is going to be, if we grab our other tool here, right at and around this 2358. Now, given the size of this gap here, I'm not entirely convinced that it will fill all in one day. So maybe one thing you pay attention to here is the half gap. So if we come in with the fibs from the anticipated open up to the high, or basically the low, the gap fill area, the half gap puts us right around 2221. Okay, so just a general area to pay attention to. What you'll notice is that it also kind of coincides with some of these lows right around here, so it makes sense that that might offer some resistance as well on the way back higher if the scenario pans out. The next scenario, of course, is the gap and go, meaning that if we open here, put in some sort of bearish pattern or just bearish consolidation that never takes out the opening print or high of day, whatever it ends up being, then look for the flush of the overnight low to take us lower into the next major area of daily support. So let me put this back on auto here, scrunch up the chart, see what we have underneath us. I would make the argument, so that's not really in play. Let's go here. That would be the first area. Let's grab the other tool and try that one more time. Let me zoom in here so we can see this. So zooming in a little bit more. There we go. So looking at this, firstly, and then of course there is another gap underneath us. So I'm not saying that it's probably going to fill, but I would start to look at support coming in around 1979. Let's scrunch back up to recent history here. Move the chart so we can see what's going on. And again, the way this scenario pans out essentially is here, consolidation for a bear flag or some sort of flush point takes us lower into 1979. Again, that's not much of a trade there, but really the door unlocks when we move lower underneath that back down towards this 1867, noting that this area here is that gap that we saw from past history. Okay, so those are really the two scenarios to watch out for. It's all going to depend on gap and go or gap and trap when the bell rings tomorrow at 9:30, and hopefully this framework will help you navigate when the bell actually rings. So if you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.